Tax write-offs for small business in Canada.
Hi, my name's Allan Madan. I'm a chartered accountant and a tax expert in the Mississauga and Toronto regions of Canada. What type of tax write-offs can small business owners deduct in Canada? That's the topic of today's short video. The first most common expense that's a tax write-off for small business owners in Mississauga are home office expenses. Home office expenses include such things as mortgage interest, utilities, property taxes, repairs and maintenance, home insurance. You can't write off 100% of those expenses, but you can write off a portion. For example, if you have a home office such as a den, a bedroom, a basement, or a confined space that you use for your work, you can deduct the percentage that your home office is of the total size of your home. So if your home office is 15% of the total square footage of your home, then you can deduct 15% of the related home office expenses. That can really add up when taking deductions on your corporate or personal tax return. The second major expense that small business owners can write off are car expenses. Car expenses include expenses such as insurance, repairs and maintenance, vehicle registration fees, fuel and oil, and other charges like parking and toll charges. Again, you can't write off 100% of the car-related expenses, but you can deduct the business-related use of those expenses. If you drove 20,000 kilometers in the year and 50% of those kilometers were driven for business purposes, then you could deduct 50% of your car expenses. There's one major other car expense that I'd like to talk about, and that is tax depreciation. If you own your vehicle, you can write off 30% of the purchase price of your vehicle per year. So if your vehicle costs you $20,000, then you could write off $6,000 in the first year. While you can't deduct all of the $6,000, you can deduct the percentage used for business purposes. In the previous example, we had said that 50% was used for business purposes, and therefore 50% of the $6,000 could be written off for tax purposes. The third type of expense is a broad category, and this is business-related expenses. What the Income Tax Act says is that any expense incurred for the purpose of earning income from business, as long as that expense is reasonable, is tax deductible. So the key here to remember is that any business-related expense that you incur, as long as it's reasonable, is tax deductible. What are some common types of business expenses that small business owners can expect? Supplies, tools, meals and entertainment, inventory purchases, advertising, supplies, and the list goes on and on. The fourth type of expense relates to capital assets, which business owners can write off. A capital asset is something of tangible value and that will last a long period of time. Examples of tangible assets include furniture and fixtures, equipment, computers. These assets cannot be written off in a single year. They are written off over a period of time based on the Canada Revenue Agency's stipulated depreciation rates. For example, large equipment is written off at a rate of 30% per year. Furniture and fixtures are written off at a rate of 20% per year. Software is written off over 2 years. There is an exception for computers. Any computer or related computer equipment, such as scanners, printers, and faxes, can be written off 100% in a single year as long as that computer purchase was made from January 27, 2009 up to February of 2011. So if you're looking to purchase computer equipment, now's the time to do it because you'll get a significant tax write-off. If you found this information useful, I encourage you to visit my website, madanca.com, which is shown at the bottom of this video, and get access to my free report, 20 free tax secrets on how to beat the tax man. So go ahead, visit my website, access your free report, and save yourself a ton in taxes. Thanks for watching.